Anyone who owns a property management business or is in the business development role for a property management company spends a lot of time answering questions from property owners interviewing potential management companies. We get all kinds of questions, and personally, I love answering them. Some have pre-printed lists so they can go through, while others just start asking questions and want more of a conversation. Either way, you should ask questions. Well, recently, someone with a substantial portfolio hit me with one of my favorite questions yet. She asked me, what questions would you ask if you were looking for a property management company? Funny how we can get so busy answering questions that we might not take the time to think about what are the right questions to ask. She really made me think. Here's the list we came up with to ask a property management company before you hire them. 1. How and what do they charge? Most management companies charge a percentage of rents collected, while there are a few that charge a flat fee. Most also have a tenant placement fee. Some charge for vacant properties, while others don't. More and more management companies charge several ancillary fees too. In some cases, they can exceed the base management fee. There is not a specific best way for a company to charge. You just want to understand how they make their money. If the fee seems low, they will most likely be making it up somewhere else. If you go with the absolute least expensive, you will find, no doubt, you will be giving up either service, expertise, or both. Number 2, what is the company's size? It's good to know how many doors they manage, but you should also dig a little deeper to ask roughly how many properties does that include. A couple 60-unit apartment buildings is a lot different than 120 single-family homes with different owners and locations. Company size is really how many employees they have, including if they're local in person, remote, or on-site resident managers. There's no one right size. There are both advantages and disadvantages to bigger and smaller company. This information will help you understand, though, what you are getting. Number 3. How long have they been in business? There are a couple reasons to ask this. First reason is that property management is a hard business with a steep learning curve. This includes managing the properties and running a business. Part of what you're paying for is expertise. That is a hard thing to get without experience. The second reason is that a management company handles a lot of money. Working with an established business gives you some peace of mind. This is true for your tenants as well. Number 4, what kind of properties do they manage? Some management companies only handle single-family residents, while others handle large apartment complexes. Many others focus on homeowners associations or commercial properties. Most will do some kind of mix of various types of properties. They might have started with one kind of property and have slowly moved into others. You should know what they manage and if they have the expertise and resources to handle your property. Number 5, what is their market area? Some companies keep a very tight circle, while others will go far. It's easy to understand why closer is preferable, but if the systems are there, they can go further. A lot of this will come down to maintenance, leasing, and the types of properties they handle. When the infrastructure's there, they can go further and still do a good job. You just need to have the conversation to make sure they are equipped to service your property's location. Number 6, what kind of insurance do they have and require? The property manager, property owner, vendors, and the tenants should all have insurance. property managers carry many kinds of insurance. They should at least have general liability, workers' comp, errors and admissions, and employee theft. Property owners will need general liability and expect the management company to be named as additionally insured on the policy. Vendors should have workers' comp and general liability. Tenants should carry renter's insurance, naming the property management company as an additional interest. You should ask your manager how they track the insurance coverage. Number 7. Who does the maintenance? Some companies use outside vendors while others use in-house people or affiliated companies to perform maintenance tasks. Many will do a blend of both. A good in-house team or affiliated maintenance company is hard to beat. Many companies that use outside vendors will still charge a coordination fee. Property owners would be shocked how difficult it really is to get vendors to come out and bid on work in today's economy. There are a lot of acceptable ways to handle maintenance. You just want to understand how it works. Number 8, how are after-hour emergencies handled? There are occasional after-hours maintenance issues that occur. Is there a number or some kind of system set up for after hours and weekend calls? The personal number of a maintenance person or a plumber might be fine for a smaller company. Just realize at some point in time, there will be a Sunday afternoon or 2 a.m. call to take, and you should know how it is covered. Number 9, how are vacancies filled? This includes everything from if they use professional photography to when properties go on the market and how are they advertised? How are inquiries handled? What about after hours? Who, if anyone, shows the property? Do they use outside agents or do they do self-showings and or open houses? Some have systems that pre-screen prospective tenants, aggregate leads, and automate the scheduling process. Good systems can cut down on vacancy times and save you money. Number 10, what is their screening process? Screening is one of the most important parts of property management in today's post-COVID era. It starts with pre-screening from when calls first come in all the way until an application is filled out and either accepted or declined. What are they looking for? Do they have a minimum credit and income requirements? Do they check credit, background, and income? Many property managers are starting to use advanced income verification and even facial recognition systems. A bad tenant is more expensive than a vacancy. Number 11, who signs leases and decides on tenants? Some management companies sign the leases and some have the owner sign. Some management companies set the rent amount and choose the tenant. Others consult the property owner. There are pros and cons to both models, and fair housing laws must always be obeyed. This is something you need to know up front. Number 12, when does the property owner receive rent? In California, there are very specific rules governing how trust funds, your money, is collected, held, and distributed. Adhering to these rules, along with the general systems and procedures a company may practice, might have you waiting until the end of the month until your funds hit your bank account. Of course, you will want your property management company to follow the law, have accurate accounting, and that everything is on the up and up. Find out the timing. And number 13, how do they keep up with changing laws and best practices? This is becoming more and more important as new laws and technologies come into play. Do they have a compliance manager, or are they involved with a trade association like the National Association of Residential Property Management, NARPM, or the National Apartment Association, NAA? There are other associations depending on the kinds of properties that they manage. It is too dynamic of an industry to operate on an island. Personally, I would like to see that they have been actively involved in the industry. After hearing answers to these questions, you should have a good understanding about the management company and if you're a good fit. There's not a perfect or ideal company out there. You will just want to make sure that you have clarity about who you're dealing with and if they are right for you. Asking the right questions is just part of your due diligence. You will also want to check them out separately. We have another blog called How to Screen a Property Management Company. Bottom line, you should ask questions before hiring a property management company to help you with your rental properties. We have 13 we recommend asking. 1, how and what do they charge? 2, what's the company size? 3, how long have they been in business? 4, what kind of properties do they manage? 5, what's their market area? 6, what insurance do they have and require? 7, who does the maintenance? 8, how are after-hour emergencies handled? 9, how are vacancies filled? 10, what's their screening process? 11, who signs the leases and decides on the tenants? 12, when does the property owner receive rent? 13, how do they keep up with changing laws and best practices? Having a conversation and asking questions is a big part of your due diligence. You will also want to check out other sources to verify and screen a prospective property management company. If you're looking for a reliable property management company or real estate broker in Long Beach, Los Angeles, or Orange County, California, or if you're just considering it and have a few questions about real estate, contact the Mike Dunfee Group today. We're happy to help.